Anyway, so problem 311, page 149, cash and accrual. So these guys formed a computer sales and service company in Soapsville, Arkansas, put in $90,000 cash, and then they want to do a bunch of transactions. And what they, so you look, they got things they did. And then using the transaction data above, prepare a cash basis statement, accrual basis statement, okay? For income and, for balance sheet too. Okay, we can do the balance sheet. So let's go ahead and do this thing. Identify the items, cash basis, and make cash basis inconsistent with theory underlying the elements of financial statements. Well, it's going to be pretty simple. If you look at what the differences are, in cash basis, what do we do? When cash comes in from a customer, it's revenue. What if they pay us in advance? That's revenue. Well, no, it's not. It's unearned revenue. Really, you haven't earned it yet. What if they're going to pay us later, though? What if, in accrual, we debit accounts receivable and credit sales? What do we do if it's cash basis? Oh, don't record it. Wait until they pay you. So the sale gets recorded in a later month, doesn't it? Well, cash basis doesn't reflect economic reality, does it? It's just cash in and cash out. How about the cash sales, though? Debit, cash, credit sales. They'll be the same for both of them, right? It's cash. So the cash sales get reported the same way for accrual and cash. But the deferrals and accruals are messed up. Okay? That's all it is. Okay? By the way, when does that deferred revenue, if you get your debit, cash, and credit deferred revenue, unearned revenue, under accrual basis, when does that become revenue? When you earn it. And what do? Credit revenue of some kind, service revenue and sales, and debit what? Unearned revenue, or deferred revenue, whatever you call it, right? Yeah. Okay? Words or terms are interchangeable. Make sense, guys? This is not a big deal, is it? Okay? How about the expense side? What if you debit expense and credit cash? It's the same for both. It's cash, right? Same for both accrual and cash basis. How about, though, if I accrue an expense? For accrual basis, I debit expense, like salaries expense, right? And I credit salaries payable, any payable. On accrual basis, that's an expense, right? Because I used it up, right? That's why I would do that. They owe them the money. I used up their work. What would we do on the cash basis? We'd wait until we paid them. It'd be in some subsequent period. We would credit cash and debit expense, right? Then have the expense and pay the cash out. Got the idea? Cash basis is just cash in and cash out. How about if it's a deferral, though? What would a deferral be? Under accrual basis, so I paid for it, but I'm not going to use it until later, like prepaid rent, maybe? I would debit prepaid rent and credit cash, wouldn't I, guys? Isn't that what you do? And then when you use it up, what would you do later? Debit rent expense, credit what? Prepaid, goes away. What would you do under cash basis? The time when you pay it, instead of debiting prepaid, you just go ahead and debit expense for all of it. Got the idea? And credit cash. That's it. Okay? So keeping this stuff straight, though, is a little tougher, right? Okay, but that's the idea. So that's really the answer to the last question. Well, economic reality is accrual basis, accruals and deferrals, right? The other is just what cash is.
So if the cost basis is based on accrual of an expense,
you don't accrue.
You don't record anything.
No.
Until you pay.
Same with an accrual or a revenue. You don't record it until you get paid.
So the difference, not really the difference, but like basically just an accrual is with adjusting entries pretty much, right?
Yeah.
In a way.
Well, the accruals and deferrals, there are also adjusting entries that are correct, right?
Sounds
Things that are
stuff like
depreciation
that, yeah.
expenses. So, yeah, so, yeah.
Right.
But, yeah, accrued liabilities and accrued revenues, right?
Yep.
And deferred liabilities, unearned revenue, right? And deferred expenses, prepaids. Yeah, you won't have any of those in your cash basis. Exactly right. Exactly. Okay? Getting clear in the story? You pound this a while and it starts gelling for you. Okay? None of this is very easy, is it, even already? And this is stuff we did in principles, but you didn't know what you were doing. Now you got to know what you're doing. Okay? That's really the big transition. Okay? It's still the entries you've been doing, right? You know what the entries are. It's what's happening. Okay? So let's give this one a shot. See if I can avoid screwing it up this time. By the way, if I am going to do a statement, accrual basis, what would I do? Who are these guys going to be? They're going to be Norman and Smith form Arkansas Sales and Service. That's fine. Pass. I mean, anyway, it's an abbreviation, so we'll put and in there. Hey, bet they didn't mean to do that. Arkansas Sales and Service.
I'd put their name up there, wouldn't you? Only of course you'd spell it out nicely. And then what would you do? I'd say income statement, maybe accrual basis. Usually you don't have to write down accrual basis. Why not? Generally accepted accounting principles require accrual basis, so everybody assumes it's accrual basis. So if you're doing cash basis, it's really important to write down cash basis. Everybody got the idea? That's critical. Night exams, quizzes, final, the CPA exam, DEX exams, traders exams. You got the idea? You really want to let us know which one am I doing. So if I'm doing a problem on the CPA exam and one's accrual and one's cash, I'd probably label both of them. Does that make sense? So it's real clear. And then this is for 1 month, isn't it? For the month ended and the date, January 31st, I think, whatever year it is. And for the month ended. Right, guys? January 31st, whatever the date year is. Okay, then what are we going to have on each of these? Later on, we find out that these guys, they're selling computers, right? So they're going to have sales and cost of goods sold. Make sense? Buying computers and then reselling. Okay, so you're going to have sales here. You might call it cash receipts from customers over here. It's probably safer, right? But you can call it sales cash basis if you want. It's all the cash that came in from customers, okay? And then what we're going to have here is cost of goods sold. Well, we're also going to have cost of goods sold over here. But that's going to be cost of goods sold for what? Cash basis. The cash that went out to vendors, okay? Big difference between those.
Chief, what's that here? You want to go cost of goods sold in 30?
Cash receipts from customers, cost of goods sold cash basis, sales cash basis, you could call it, is fine, okay? But it's really cash receipts from customers, isn't it? That's when you sold it. So we're real careful to not make the cash basis statement look like an accrual basis statement. Does that make sense? You put headings on it, make sure that everybody knows. Otherwise, they'll assume they're looking at an accrual basis statement, okay? And so that's it. This would be just cost of goods sold because that's what it is. That's going to give me a gross profit. Probably. Why does that happen? Gross profit, okay? And then over here, we'll have gross profit, cash basis maybe, whatever you want to call it. Everybody good? Where you look and where the thing writes are different places for some reason on the screen. Probably where I'm standing. It's probably where I'm standing. Okay, goes back. All right, and then they're going to have a bunch of operating expenses, so we'll do operating expenses. These will be accrual ones. That'll give me a net income. And over here we'll have operating expenses. And then we'll do a balance sheet too. Okay? Net income. Right? We're going to have that, huh? Okay. So, let's try some of the transactions. Let's do a cash basis and accrual basis. So accrual and cash. Okay, what's the first transaction that they have there? We're doing problem 311 on page 140. Right. All right. So what's the first thing that happens, everybody? Oh, there's the investment. I guess we should do that. We didn't do that before either. We can't do a balance sheet without the investment. So let's do the investments first. What would it be? On accrual, I think I would debit what? Cash? It was cash they got, right? And what? Credit what? Contributed capital sometime, common stock or something, right? Maybe additional paid-in capital and common stock. Sure. What would you do if your cash basis? It's the same. Issued stock, right? Yeah. And it was for cash. Pretty good. Okay? And there's the first one. What's the second one? Number one. Pay $6,000 in advance for 3 months rent on an office, showroom, and repair space. And they did that on the first at the beginning of the month, right? Yes. Okay. Okay, it's for 3 months, including this month, January. Okay, so what would that be? Your accrual basis, what would you do, everybody? I paid rent in advance. Debit prepaid rent. 6,000. Credit. Cash, 6,000. What would happen if your cash basis, everybody? Still credit cash? Sure, anytime cash comes in, you debit it, anytime cash goes out, you credit it, and it's always revenues and expenses, isn't it? Unless it's contributed capital, we're talking about equipment or something, maybe, okay? Borrowing money. Okay, debit what? Doesn't matter when I'm using it. So when I paid for it, what's it going to be, everybody? Rent expense. So you can see that right now we have 4,000 more rent expense, right? Or we have 6,000 more rent expense under cash when we do accrual. But what would happen with your adjusting journal entry with this month end? Let's do an adjusting journal entry at December 31st, or January 31st, I apologize. January 31st is the month end, right? So we bought this in January sometime, maybe January 1st, we don't know. Okay? What would we do at January 31st? How much of it did we use up? How many months was it for? 3. So how much would you use up? 2,000. So what do you want to have for your accrual basis entry? Rent expense. Excellent. How much? 2. See, these are things you already know, aren't they? Right? And credit what, of course, would you use up? Prepaid rent. Asset goes down. What's going to be left? What's going to be on our income statement under accrual basis? Rent expense of 2,000. What's going to be on our income statement under cash basis? 6,000. It's 4,000 difference, right? Everybody agree? So I've got 4,000 more expense over here. So cash basis has 4,000 more expense. You guys with me? It's going to make a difference in their income, isn't it? What's going to happen on the balance sheet? What are you going to have on the balance sheet relating to this under cash basis? Nothing. There's no such thing as a prepaid. But what do you have under accrual basis? What's prepaid rent? 4,000. So you were going to show prepaid rent of 4,000 on the balance sheet, right, for accrual basis, and you don't have that at all on cash basis. Got the idea? Difference in the balance sheet, isn't it? Okay. Let's try the next one. We're done with that. Okay. What's the next thing we got? Purchase 40 computers at a cost of $1,500 each. 6 graphic computers, personal, $1,500 each. Graphic computers at $2,500 each. 6 of them, $2,500 at $300. You multiplied those out and added them up, and what'd you get? 82. Okay. Is that what the answer had? We didn't mess that up, did we? Okay, 82.5. All right. So what's that going to be? Sometime in January, early in January sometime, we bought it, right? So what would we do under each of these situations? What'd you buy if you are doing accrual? Well, probably not equipment. I did that earlier too, but we're going to resell this, so it's not equipment. Equipment would be if we're going to use it, depreciate it. So what is it if we're going to sell it? Merchandise, in other words, inventory. Yeah, we want inventory, but it's merchandise. You can call it merchandise, you can call it inventory. Just, you know, merchandise is inventory, okay? Merchandise inventory, right? So maybe merchandise inventory debit. What did we say it was, 82.5? We haven't sold any of it yet, right? It's not an expense yet, it's an asset. Everybody agree? Okay, and then credit what? I guess we paid for it all, didn't we? Does that make sense? Everybody's staying with me, right? Okay, everybody good? Okay. By the way, I don't care if you say anything. I don't care if you take notes. I'm writing it down anyway, and I'm going to post it. I don't care how you do this. What do I care about? You know how to do it. That's all I want. If you were working for me, if I could not explain something to you and you know how to do it, I'm thrilled. Got it? You can figure it out yourself. I think ultimately, here, I'm still kind of teaching you guys, although I had a guy in the MBA the other day, the assessor, new MBA student in accounting major, finished doing his 150 hours that way. And he says, Keith, you didn't teach me anything. I had to learn everything all on my own. And I said, well, thank you for the compliment. It's really true, isn't it? He didn't, you know, he thought he learned more from deck, because deck actually kind of spoon feeds you a little bit. You don't really learn more from deck unless you do what? Think. Where's my job? I'm not transmitting information to you. This isn't even anything new. What am I trying to get you to do? Think, 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 and think fast. And work fast. Have confidence. And understand what you're doing, right? And be able to just roll. Just do it. Just do it. Okay? And then by the time you're in Dex class, he's going to throw a whole bunch of stuff at you, and you're just going to be a sponge. In Schrader's class, he's going to throw a bunch of stuff at you, and you're going to pull your hair out. Right? It'll be fine. I'm not kidding. The stuff gets real hard. Pension stuff that he's doing. It's really annoying stuff. It's all political. So this is political process gap, right? 313, a lot of it is just political compromises that were made. And that's what accounting is based on. So, okay, here we go. Okay, anyway. So, what would you do on the other side? It's still going to be credit cash, don't you think? Yeah, but what? No such thing as inventory. I guess it's cost of goods sold, cash basis, whatever you want to call it. Right? Expense it all. Expense of getting the sales. It's cash disbursements to vendors, is what it really is, isn't it? It's all about it, okay? But man, is this going to be a difference in income or what at this point? $82,500. Asset here, expense here. You got the idea? Okay, what's the next thing we have? Keep going.
Sales, repair, and office employees earned $12,600 in salaries and wages during January, of which $3,000 is still payable at the end of January.
All of a sudden, accruals and deferrals are easier than cash basis. It's weird, isn't it? But what would it be for the accrual and deferral here? Well, I'm going to leave myself a little room here for a later entry. What are we going to do? At January 31st, by January 31st, I've done what? I incurred how much? Salary and wage expense, right? How much? How much did my people work for me and earn? 12.6. Yeah, we record the whole 12.6, wouldn't we? How much did you give them in cash? What's the other 3,600, gang? You didn't pay your employees. They earned it. What is it?
Cash, it's all 96.
Oh, it's 96. No wonder you were looking like he's crazy. So this was 9,600, and this is only 3,000. Is that right? What's the 3,000, everybody? Salaries and wages payable. You got it. Everybody good? That's an accrual of expense, isn't it? The prepaid is a deferral of expense, right? Prepaid rent. The salaries are an accrual of expense. Everybody agree with that? What will we do on our cash basis, however? We're only going to record what? The cash, 9,600. And what else is that going to do to us? What's the salary and wage expense going to be? 9,600. So what happens? Here I have what? Less expense of 3,000. You guys agree with that? True, isn't it? Less expense on cash basis than I have for accrual basis. True? Okay, good. So we got that one. Okay. Next.
We sell a whole bunch of computers at $25,550 each. 4 graphic computers, that's the regular personal. 4 graphic computers for $3,600 and 15 printers, 5. We got $75,000 cash in January and 23.4. They sold at a deferred payment basis. So what's the deal with that? They did it for us. They multiplied it together and told us what the total is. What's the total? 98,400. Is that right? Everybody agree? So what's our sales under accrual basis? 98.4. So wouldn't you credit sales for 98.4? Everybody want to do that? So this is sometime in January, right? During the year. Sales. 98.4. What do you want to debit? Cash. How much?
the rest? 23.4 of what, guys? Accounts receivable, nothing to do with this. Okay. Are the sales as much under cash basis? No. You don't have such a thing as credit sales. Could you have deferred revenues here too? Of course, right? We could be earning deferred revenues, and those wouldn't be sales under cash basis when I earned it. When would they have been sales? When I got paid. So I'd recognize the sale sooner under cash basis, right? If it's unearned revenue. That's all. Make sense? And they paid me, it's a sale, right? They paid me in advance, so what? They pay me later, so what? Put in the period they give you the cash. That's all. Okay, so what's this one going to be? Debit cash, how much? And credit sales, how much? This is too easy. Okay? So what does that mean? I have less sales, right? By how much? 23,400 cash basis compared to accrual. Everybody good with that? That's true. Okay? But there's more. What else must there be here? I'll put them up here so you can sort of see them in relation to the inventory. You know what? I'm selling stuff. I am selling what? Merchandise inventory, aren't I? I don't have the merchandise inventory anymore. What does it become? Cost of goods sold. So what would you do? Under accrual basis, what would you do when you have sold them? Debit what? Cost of goods sold, which is a major expense of getting your revenues, right? Which glad you've been studying this stuff. You guys did work over the weekend, right? You had a lot of time to really dig into this again. Okay, debit cost of goods sold and credit what? Merchandise inventory goes away, right? We're selling off a bunch of that inventory, aren't we? How much? You got to figure it out. How many of the mini computers or personal computers do we sell? 30? What they cost me, go back to number 2, that's what we bought, 1,500. So 30 times 1,500, right? What's that? 45,000? Did I get the number in the right place? 45,000? Okay. And what else did we sell? 4 graphic computers. What did they cost? 2,500? And then another 10,000? Everybody agree? So where are we at? 55,000? What else did they sell? 15 printers. What did they cost? 300. That's another what? 4,500. So where are we at now? 59.5. Great. Okay. So I sold 59.5 of that 82.5 of inventory. Would you guys agree with that? Okay. Separate the sales price from the cost. Okay. Sales is what we sell them for. The cost is what they cost us. Okay. So those entries go together, of course. Okay. So debit cost of goods sold. What did we say was 59.5? You said it was. You said it didn't say much anything. 59.5. 59.5. Cool. Okay, now what's the deal? Here I am going to have more what? On my balance sheet I'm going to have more inventory, aren't I? I'm going to have inventory. What's my inventory going to be? 82.5 less 59, what's that? 23,000, is it? Okay. What's going to happen over here on the expense side for cash basis? Instead of having 59.5 of expense, what do I have? 82.5. They're going to have more expense, aren't they? More cost of goods sold. By how much? 23,000, right? You guys with me? True, isn't it? Oh, by the way, I said what the expense was on the payable here, but what else am I going to have on the balance sheet under accrual basis? I'm going to have more liabilities, aren't I? By 3,000. Everybody agree with that? I am. I'm not going to have that on my cash basis. Okay? So drive you insane.
What about on the
Account receivable too, right? You're going to have more accounts receivable. By 23.4. Okay. What else? We got anything else? The prepaid, I guess I did, didn't I? Yeah. All right. Everything else I think is the same. Did I get it? Whatever you're going to ask. Who was guessing first? What about what?
yeah, that one.
That was it. Okay, cool. Okay, good. All right, what else do we have? Anything? One more thing, wasn't there? Says, other operating expenses, 8,400 are incurred and paid during January. 2,000 of incurred expenses are payable. So what's the total expense? Oh, maybe we screwed this up. Did we need 6,400? 8,400 are incurred and paid. Plus 2 is 10,400. Did we do it that way? Maybe not. Yeah. Okay. So what would that be? By the end of January, what happens? What would cash basis do? How much cash did you pay? 8,400. How much operating expenses do they have? 8,400, right? Okay, everybody agree with that? And that's it. What would we do under accrual basis? What's operating expenses, you guys? It's not just the ones you paid, it's all of them you incurred too, right? If we used up a prepaid, that'd mess things up here too, wouldn't it? So operating expenses is 10,400. We were rushing too much, guys. Those are the two that were there earlier. Yeah! What do we need the 2,000? What's that going to be? Some sort of accrued liabilities, accounts payable, right? Accrued liabilities. Say accounts payable stuff. Okay? 2,000 more. So guess what? That's going to go on my balance sheet. More accounts payable. Yeah. How about over here? How about my expense? 10,400 here, 8,400 there. Less expense by how much? $2,000. And that was everything, wasn't it? Okay, now what do you want to do? Let's combine this with our financial statement, okay? See if we can actually pull this off. You guys are going to go blind trying to read this, okay? But anyway, it's pretty small, but we can see them at least. Okay? Let's figure out what would be different here. Well, first, let's just record it. Let's record the income statement. What's sales under accrual? Do the accrual first. This side's accrual, right? What's sales under accrual? Guys, anybody out there? 98.4. It's this one right here. What's the sales under cash basis? It was only the 75, wasn't it? That one right there. It's easy, isn't it? Sort of. Okay, what's the difference between the two? We're going to have more income under accrual basis by 23,400, aren't we? Because accrual basis or less under cash basis, however you want to say it, right? Okay. Okay. Okay, what's cost of goods sold? 59.5 under accrual. What's gross profit then? 59.5 away from 98.4. How much is that? 30. Okay, everybody good with that? Okay. What's my cost of goods sold under cash basis? That's there's my 59.5. What was under cash basis? 82.5. It's a mess, isn't it? Okay, what's my gross profit under cash basis? It's negative, isn't it? Okay. And the whole 7,500. See how people might want to use cash basis for their tax return if they're a real small company? Nice, huh? You have a loss instead of a profit. If you have a profit, you have to pay tax. If you have a loss, you don't. So you're a real small company. Cash basis might not be bad, especially when you first start your company. When you get very big, you can't use cash basis. Yeah, you have to stick to accrual. The cash basis is fine. There's nothing wrong with it. Would you use cash basis for their financial statements or just for their tax return? Just for their tax return. You want accrual basis to know what happened. You got to tell your small clients if they're making money or not. Not, otherwise, in this case, they'd be panicked, wouldn't they? Oh, I'm losing a fortune. No, you're not. Not if you can collect your receivables and you can sell your inventory, you're not. Okay, anyway. All right, so let's try operating expenses. Let's just put everything else into operating expenses, okay? What are the expenses under accrual? Rent is $2,000, right? What else we got? Salary and wages at 12.6, what are we, 14.6? And operating expenses at 10.4, what are we up to? Is that 25? Did we get the answer the author got this time? The income is 13.9. Is that right? Is that what the author has? Yeah, good. Okay, I don't know what we did before. It's off the weird. Okay, 13.9. Okay, good. Actually, I think what we did before was we screwed up the 2,000 accrual, right, expense. That's what we did. Okay, so let's try operating expenses cash basis. This one's going to be weird. What do they have? 6 plus what? 9,600. So what are we, 15.6 plus 8,400? Am I right? How much is all that? 24 instead of 25. So how much do they lose? 31.5. Is that what the others had too? A little more careful this time. All right, let's look at what the difference is between these incomes. How much is it? You know, positive net income of 13.9 and a loss. This is net loss. 45.4. Yeah, it's two of them added together, sure. 45.4. Can you find it? That's the last part of the question. So on the CPA exam, explain the difference. Now that you found it, tell me what the difference is. It's easy, right? What are the differences, everybody? What did we find? What did we find here? Let's see, we have 4,000 more expense on the cash basis, right? That make the income less by 4,000? You guys add these up for me. And then there's 27,000 more expense for cost of goods sold, is that right? So 4 plus 27 is 31. Everybody agree? Less income under cash basis. Less expense by 3. That's going to give me more income in cash basis. So what are we down to 24 now? Is that where we're at? 24 difference? Sales are 23.4 less though. So what do you have? 24 plus 23.4, right? How much is that? 47.4? You guys have calculators. 47.4. But then we lower expenses, which would give us more net income, right? Under cash basis. 47.4 less 2? It's a miracle. It's 45.4. Boom. Explain it, right? It's all those accruals and deferrals. Okay? Easy? How would you do a balance sheet with this? Oh my gosh. How would you do a balance sheet? What do you think? No. That page. Oh, I see what it is. Let's get on this page. Get on this page first. Then we'll add a page. Yeah, there we go. So what do you want to do? Figure out what? We do a balance sheet for the two of them. Company name, whatever it was. Balance sheet. I'd say accrual. This is an old CPA exam question, by the way. Company name, balance sheet, cash basis. Got the idea? Should we call it cash basis? What are we going to have? Let's just list our assets. We'll keep it simple. Liabilities, equity, assets, liabilities, equity. I personally believe that the liabilities plus equity will equal the assets. So, okay, what do you think, guys? Get a total assets here. Total liabilities plus equity down here. Probably not that high on the page. Okay. Get our liabilities and we'll add up the liabilities and equity. Yeah. We do the same thing over here. So which ones go where, guys? Cash goes on both of them. What do you guys think? How much cash is it? It's 90,000 to start, right? Less 6, less 82.5, less 9,600, plus 75,000, less 8,400. Will that be the same over on the cash side? Oh yeah, cash is cash. How much did you say it was? 58.5. Be the same, wouldn't it? It's no big deal. Okay, what other assets do you have under cash basis? Inventory? No. Accounts receivable? No. Prepaids? No. Strict cash basis, land, building, equipment? Nope. Really, most people don't do that. They go ahead and record those. It's modified cash basis. They put the land on the books, and then they depreciate the equipment and buildings, right? But that's modified cash basis. Strict expense. Okay. What other assets do we have in our cash basis? None.
Inventory for cash.
What's that?
Inventory for cash.
Inventory of cash. We just have cash. That's it. Okay? That's all we have. Wow, that was hard. Okay, so let's do accrual basis. What's it going to be? What's cash? 58.5. What else do we have? Accounts receivable. How much is accounts receivable? Prepaid rent. And inventory. In this little problem, we're going to have those three, aren't we? What's the balance in accounts receivable? It's like 23.4. They never collected it, did they? What else do they have? Prepaid rent. We started with 6. How much do we earn? Or use up, rather? 2. So we have 4, don't we? Even I could do this. Okay, that's the prepaid rent. How about inventory? What did we start with? 82.5, right? What did we sell? 59.5. How much do we still have? 23,000? Is that what that is? I sure hope so. 23? Is that all our assets? I think so. We don't have any building or equipment, but could you in real life? Of course you could. You have all kinds of things. What do all those add up to for total assets? 58.5, 23.4, 4,000, and 23,000. 108, 9. Okay. Let's try the liabilities, gang. What do you have? Under cash basis, what kind of liabilities do you have? If I had borrowed on a note payable, I would have debited cash or credit notes payable, I'd have that, right? Even under cash basis, right? Just like I'm going to have contributed capital under cash basis, right? But what kind of liabilities do they have? Any accounts payable? No. Any accrued liabilities? No. Anything? No. 0. Oh my gosh. Really? Uh-huh. Really?
They don't have wages payable?
No. Why don't they have wages payable? There's no such thing. When the cash goes out for the wages, it's an expense. Until the cash goes out, it's not. There's no such thing as a wages payable. We didn't accrue any, did we? But how about under accrual basis? Oh, yeah, we got them all, don't we? What do we have under accrual basis? Don't you wish we did cash basis? No. We wouldn't have jobs. Okay, so what would, and also nobody knows what's going on. So what would we do under accrual basis? What kind of liabilities do we have? There is a salaries and wages payable and an accounts payable, isn't there? I like it. Salaries and wages payable, and there's also an account payable, isn't there? Those are the only ones, aren't they? Or maybe accrued liabilities instead of accounts payable. I don't know what it is, right? They didn't tell us. Okay, so how much is salaries and wages payable? $3,000. So I'm just going through all these things I listed over there. The prepaid, right? The inventory, that liability for selling wages payable, the account receivable, and now we got accounts payable. How much is it? 2,000. What's their total liabilities? It's like 5,000, is that right? Okay, here we go. Equity. Let's do equity then. By the way, we can figure out what we've got to have here, can't we? What do you think the equity is going to be in total for total liabilities and equity, right? What's the total going to be here? 108.9, I hope. Okay. What's it going to be over here? think the equity's gonna be? There's no liabilities. 58.5. What do you think the equity's gonna be here? You're gonna take 5,000 away from 108.9, right?
Yeah.
So 103.9, is that what it is? You guys good? It's true, isn't it?
How do you get the 103? I only see 90.
108.9 less 5?
I mean, it goes, entries with 90.
No, let's see what we can find. Maybe I screwed it up. Okay, so what do I want this one to be? 58.5, right? The 0 plus 58.5 is 58.5. Okay, well, let's figure out what equity would be. What are the components of equity for both of them? Contributed capital and retained earnings?
Yeah.
And there were no dividends, right? If there'd been dividends, you have to record those. Both, they'd be the same for both, right? Be credit cash and debit retained earnings. Okay? All right. So how much is contributed capital, everybody? 90. There it is. And how much was the income? Oh, because all that's going to happen in retained earnings is what, gang? It's a new business. It's going to happen in retained earnings, both cases. Beginning, 0. Dividends, 0. This is an easy problem. They could make it much harder. Net income. What was net income? What do we have on the income statement for accrual basis? It was 13.9. When you close it in there, what's going to happen? You're going to add 13.9, and what's your ending retained earnings going to be? 13.9. We are miracle workers. What's 90,000 plus 13.9? 103.9. When you add it to liabilities of 5, it's 108.9. We got our points. You become a CPA. Okay? All right? On cash basis, what do we have? What was our income? They lost 31.5. Debit, right? This was a net income. This is a net loss. So what's their retained earnings? It's not earnings, it's a retained earnings deficit. True, guys? How much? 31.5. What's 90,000 that they contributed less than 31.5 they lost this year? Is that 58.5? Yes! Perfection.
So here, is it like a general rule in the cash basis that they don't have anything like accounts payable?
They have no accruals and no deferrals. If you did not pay out the cash, you do not have an expense. If you did not receive the cash, you do not have a revenue.
So that's a general
If
rule.
it was a cash deal, then it's the same as accrual.
Yeah.
But if it's a deferral, there's no such thing as a prepaid. Go ahead and have the expense. There's no such thing as unearned revenue. Go ahead and have the revenue, right? The cash basis. On the expense side, right? There's no such thing as a payable. You're right. You don't have the expense until you pay it, later period. On a receivable, same thing on the sales side, right? No such thing as a receivable. You don't have a sale until you get the cash. Done. Done, done, done. This is a nice problem. This was a good one to suggest. I like this one. I've done it so long. It's a good one. I like it.
One more thing, about inventory on the cash basis.
No such thing.
I saw like you purchase some kind of inventory.
No, it's an expense. I bought it, it's an expense. Strict cash basis, I bought a piece of equipment, I expense it. No such thing. I mean, I expense it anyway, right? Land is up in the air, but most people don't use strict cash
I
basis.
mean, merchandise inventory.
There's no such thing. There is, it's sitting in your store, right?
Yeah.
But you don't have it in your books. It's expensive as soon as you buy it. Is cash basis easier to account for? Sure. Debit cash, credit cash, and the other side is revenue or expense, right? Debit cash, credit revenue. Credit cash, debit expense. But it's a mess. It does not tell people what's happening. So your answer to which is better for reflecting economic reality in terms of what happened? Accrual or cash basis? Accrual. If you want to predict future cash flows, which one's better? Accrual. I can manipulate current cash flows. I can have more cash if I just don't pay my bills, pay later. That's not a good thing, right? Having more cash that way, right? I get people to pay me in advance and have more cash, right? I haven't earned it yet. It's unearned revenue. You got the idea? So you can manipulate cash flows. Dude, I can borrow cash and have more cash. right? So don't look at a cash flow statement to predict future cash flows. Look at the income statement to predict future cash flows. That's a little hint for when you get to doing weighted average cost of capital asset price and per value companies. Okay? That's a good one. It's a good one. Boy, that took a lot of time. Actually, it does take a lot of time to do one of these things. That's a nice problem, though. It covers a lot of different things. What else you guys want to do? Besides leave, we get to do that. David Collins will fire me pretty early. I hope I'm kidding. Get rid of that dual thing. Now it's big. Let's do something else. Get it somewhere. Yeah, what do you mean accidentally? What's that? Oh, that's all right. Okay. Yeah, sure. And they're still hard, aren't they? Now, you can pick any problem in these chapters, and they're just hard. So work out what you want. It's okay. You'll get it all. Okay? Just keep pounding, just keep pounding. Is it kind of fun in a diminutive way? You know, sort of like pounding your brain against the wall. It's kind of fun after a while. Yeah. You guys do sports, don't you? Why do we do that? My father never understood. It's like, you go out there and you pound on people playing football and wrestling. I did. So it's too important for other sports. But anyway, wrestling for us is important too. Those are strong, those things. So you go out there and spend all kinds of energy and you sweat and everything, you know, and you don't get paid. What's wrong with you? You should get paid if you spend energy. You really believe that? So, that's work. I did it anyway. That was crazy. But it's kind of nuts. This is kind of nuts too, because you get paid for it also. You want to do exercise 3:11. All right. Okay, didn't I say problem on the recommended ones? I did it right, didn't I? Yeah, P. Okay. Yeah, but that's okay. You can do these. Adjusted trial balance is shown below. Prepare an income statement, a statement of retained earnings, and a balance sheet. Really? Okay, I'll do this much for you. I'll go through these accounts and we will identify, well, wait a minute. That's too easy. Did you look up the answer?
Yeah.
What hung you up? Maybe that's it. Oh, is there unearned revenue? There's not, but if there was unearned revenue, would that go on an income statement? No. Unearned revenue would go on the balance sheet. Is what got you dividends?
I had a problem on E3, 20, 11.
Oh, all right. I was going to say that's just too easy. What does the dividend do, by the way, on E311? It's a direct reduction of retained earnings, right? There's no such thing as dividends expense. Everybody knows that, right? Don't tell me there's dividends expense. I will make so much fun of you. I will point you out in class. The principals, they just mark red all of it, right? But if you do that, I'm going to say, for crying out loud, you really think when the owners withdraw some of the profits from the company, that's an expense of generating revenues? Really? What are dividends? The owners took some of the profit out. Get it? So now you feel like I'm picking on you. It's your fault. You picked this thing. Okay, 3 what? Fun.
You're supposed to like.
Oh, I feel better now. Yeah, let's do reversing entries. We haven't done reversing entries, have we? We better do something. That'd be a really good idea. That's what I wanted to make sure we got done today. I'm glad you reminded me. Okay, so good. Adjusting and reversing entries. By the way, what we just did was really valuable, don't you think? The thought process, cranking through it. Can you do it much faster than I just did it? Oh, yeah. Once you know what you're doing, right? But they give you a while on a problem like that on the CPA, especially if they actually explain, right, what happened, what's going on. They give you some time, because what's going to happen to most people that didn't have the misfortune of going to development in one of our competing schools around the area. They're just going to walk away from that thought. And probably walk away from class passing essentially. It's hard. It's hard to do a cash flow approval, especially the way they set that thing up. Making you do 2 financial statements and then explaining the differences. I mean, that's a big problem. Okay, it's a monster. How much time did they say you were supposed to take doing that problem? 25 to 30. Yeah. That's confidence. But yeah, CPA exam, you can give you at least that much time too. Okay, sure. Okay, probably 30. Okay. And it's real doable within that, right? thinking and moving. Okay? So anyway, let's try 320. So what we're doing is adjusting and reversing it. What's an adjusting? Adjusting the account from where it is to where you want it to be. That's all it is, right? I know what's in the account. Maybe it's prepaid rent. I know what's in the account. I know what's in rent expense. Right? I know what's there. It's what's in the general ledger. And then what? I find out what I want prepaid rent to be, and I find out what I want rent expense to be, and I adjust from where I am to where I want to be. The journal entry is going to be something. Either debit prepaid rent or credit it. You either debit rent expense or credit it, right? Depending on if it's too big or too small in each case. Right, guys? That's what you do. But figuring out the amount's the hard part. So just relax, write down where you're at, figure out where you want to be, and make an adjustment, okay? Now, so that's adjusting entries. What's reversing entries? Reversing entries are, should I reverse it? Now, this one drives you a little bit crazy. You don't have to do reversing entries, but you can if you want. And the authors give you this amazing rule of thumb, which I can never remember because I don't care what it is, because you don't need it. So what is it? Something like if the original entry went to a permanent account or a real account, balance sheet account, and then you make the adjustment, don't reverse it. Which I agree with that. It makes sense. I don't remember it. And then if it went to the income statement account and you make a reversing entry, don't reverse that. Is that the way it went? Is that right?
It's got like three
It's
rules.
this. Yeah.
All accruals should be reversed. All deferrals for which the company debited or credited the original cash transaction to an expense or revenue account should be reversed. Adjusting entries for depreciation and bad debts are not reversed.
Oh, I said it backwards on the expense of revenue, sorry. But yeah, depreciation you never reverse. I got a better rule of thumb. Much better than this. Here it is. If it is going to reverse anyway in the future and you want to reverse it, feel free. They're optional. If it's going to reverse in the future and you don't want to bother to reverse it, feel free not to. You'll reverse it anyway in the future with an adjusting entry, right? These are optional. I used to not even cover them very much. But then I found out that little companies in this area are using reversing entries. Who might that be? General Electric. I'm not kidding. We had students doing internships at GE. And I said, have you guys ever seen a reversing entry anywhere? And, well, I do. It's my job. And I says, what? Who do you work for? GE. GE uses reversing entries. You can if you want. There's nothing wrong with it. It's easier to program the computers. But oh, come on. It wouldn't be a big deal, right? You don't have to use reversing entries. It's also easier to train your staff, right? But you have to think a little bit more. The accountant has to think a little bit more themselves. They have to do reversing entries, I guess. Okay, now here's the deal. If it's going to reverse anyway, if you have the policy in your company, everybody hear that? If your policy is to use reversing entries, go ahead and reverse it if it's going to reverse anyway later. That make sense? Okay? The only time you care about your balance sheet and income statement being correct is when you do what? In other words, all the accounts in the general ledger. When do they need to be the right numbers? When you do a balance sheet and income statement, because that's the only time you care about it being correct, right? So any day in between when you do the balance sheet 1 month and you do the next month's balance sheet, who cares what the accounts are? So immediately on the first day of the month, right, the following month, or the following year if you do an annual, you make a reversing entry. Who cares? It gives you accounts that look really silly, right? I'll show you that, okay? They look really ridiculous, but it doesn't matter. They'll be correct at the end of the month. Got the idea? So it's going to let go of this thing. It doesn't have to make sense. Kind of looks silly, okay? I think it is a little bit silly, okay? But it's all right. We can do them. We can use them. They work fine. Now, here's the other part of this. This is the common sense part. If it is never going to reverse, don't reverse it. Depreciation. You debit depreciation expense, credit accumulated depreciation. What, you're going to undepreciate it or something later? Think so? What if you debit rent expense and credit prepaid rent? And that's your adjustment. Are you ever going to undo using it up? That's impossible. So that's why I have to go back, right? Okay? But if I took it out of insurance expense and I put it into the prepaid, is that going to reverse? If my entry was to debit the prepaid and credit insurance expense, will that one reverse? Yeah, because the prepaid is going to get used up. So you can go ahead and reverse it if you feel like it. Or you can just wait until the next financial statement and reverse it, right? Doesn't matter. Everybody got it? You have to reverse it either way. Okay, so let's try these. So let's go through and do the adjustments. That'll be useful because they're going to make you do a bunch of adjusting at your time, right? You guys, most of you had me for principals. What did your principals, quiz and test look like on accruals and deferrals? They're gonna kill her, weren't they? They're kind of rough. Imagine what this is gonna be like. Unbelievable, okay? I promise. Unbelievable. Be ready to do accruals and deferrals, inside and out. Will it give you some easy ones? Yes. Balance and prepaid at the beginning, the balance at the end. And here's how much you bought for prepaid insurance. What do you think insurance expense is? You did some of those exercises. I'll actually give you to those things. There's some points attached. Those are going to be easy after connecting through this stuff. How about cash or accrual problem? Is it easy? No way to make it easy. Not really. That's the way I want to use people. So you guys tell me what these entries are, and then tell me whether you should reverse it. What's the first one? Entry 1. What do we know? We're on 320. Prepaid insurance shows a debit of $5,280. It's the cost of a 2-year policy. We bought it August 1st. What are you going to do? Prepaid insurance has how much? 5280. What day do we buy it? What's our year end? Always have to know that. Does the year end have to be December 31st? Of course not. Is it in this case? Yeah. How many months went by? Sure, and count August. 5, right? August, September, October, November, December. Okay, 5 months. Okay, it's 5 months. Okay, what's going to happen? Some of this prepaid gets used up and it becomes what? Yeah, name? Yeah, okay, good. Just need to go back in principles there. Then, okay, so what do you think? We're going to take 5,280 and divide it by how many months? How many was it? 2 years? How much is that per month? 1,100. Good. Nice and made it even. And how many months went by? So what should be $5,500? Which account? Which one?
220 a month. Total.
It wasn't 1,100 a month. Where did we get 1,100? Oh, it's 1,100. So you guys skipped a step. Pay attention. It's been a long day. We did 2.5 hours of review after 2 hours of class, and I'm old. Plus, we had football practice yesterday. And I taught first graders. That was strenuous. Oh, man. 14 of them. Well, there was a teacher there, too. I only had 4 or 5 at a time. It was strenuous. Oh, at least you guys sit. Yeah, they were so cute. My granddaughter's kindergarten class. I get to go back a couple times more this semester. Anyway, so how much was it a month? 220. Oh, thank you. Times 5 is 1,100. That's what looks a little better compared to 5,280. Okay, we used up 1,100 of it. What do we want to be 1,100? Which account? Yeah, we got nothing relating to this policy in here. We want this to be 1,100. So how much have I not used up, of course? The other 19 months, right guys? What's 19 times 220? 4180? It's a miracle, isn't it? Well, of course it is. And that's how much you didn't use up, which is what should be on the balance sheet as a prepaid. Everybody agree? So how much do you want to take out of the prepaid? What's your adjusting journal entry? Debit what? Insurance expense. Credit what? Prepaid insurance. You guys are getting these right, aren't you? Okay, what I want you to do is tell me, should you reverse that or not? Are we ever going to undo using up this insurance? No. I don't think you have to remember a rule of thumb. It'd be stupid to reverse that. No reversing it. Of course not. Okay? All right, I want to change the problem a little bit. Let's do this. How about if instead you have this? So this is 1A, I guess. I'm making up a new version of it. My prepaid insurance has nothing in it. Which should mean my insurance expense if it's the same company, and you bought an insurance policy, must have what in it? Yes, they bought a policy for $5,280. This bookkeeper felt like putting it into prepaid insurance. This bookkeeper felt like putting it into what? It's insurance. It's either going to go into prepaid insurance or what? Insurance expense. Don't you think? I mean, if they put it someplace logical, when I pay for an insurance policy, right now it's a prepaid, but what is it going to become as I use it up? Insurance expense. Is it okay to put it in the expense account instead of the prepaid if you feel like it? Of course it is. Who cares? It's going to be expense someday anyway. If it's a 3-month policy, I hope you put it in the insurance expense, right? If it's a 2-year policy, I don't care where you put it. Part of it's going to be prepaid and part of it's going to be insurance expense later, right? Both are right. Okay? Both are fine. We don't care. I have met people who are out there working, right? But I was in public accounting. And they say, no, that's wrong. You can't go to insurance expense because it's a prepaid. What's my response to that? Who cares? The only time I care if the accounts are right is what? When I do a financial statement, do a balance sheet income statement. Absolutely. Who cares where they put it? This number's wrong. This number's wrong. These two are right. I made them right. That's all I care. Yeah.
But if you say you have to wait until you make the financial statements, then wouldn't that be too much work to do?
No. Didn't I have to make a journal entry here?
Yeah, but
I'm still going to make one.
I mean, I'm talking about do they have to write a journal entry for each
No.
expenses they make?
No, only when I do a financial statement.
Yeah.
I'll only do adjusting entries when I do financial statements. So here's what would happen. When they write the check, instead of crediting cash and debiting prepaid insurance like they must have done here, right? I'm going to debit insurance expense. Instead of debiting prepaid insurance, I'm going to debit insurance expense. It's fine. It's in insurance. Now, what do you want the balances to be in each of these accounts? This will maybe make it clearer. What do you want the balance to be in each of these accounts? What do you want prepaid to be? Yeah, it's what you didn't use up. Okay. What do you want the balance to be in insurance expense? How much did you use up? $1,100. Right, guys? Does anybody have an idea what this adjusting journal entry would look like? Now, this is going to be different, but it's not more work. It's still one debit, one credit. Okay, what's it going to be, guys? Prepaid insurance is nothing. You'd like it to be $4,180. You guys are just staring at me. Come on. What do you think? Debit $4,180. I don't care if you answer me, but you got to answer me with your eyes. Okay? I know what I'm doing. I got it. Or you need to say, what the hell are you doing? Do one or the other, guys. Those of you who don't know me very well yet, if you don't ask me questions, I don't give you any answers. Okay? Ask. If you don't understand something and you think everybody else in this room does, I don't care. What if I was the only person sitting in the meeting who didn't know what was going on and everybody else in the room knew what was going on? What would I want to do? Catch up as rapidly as possible. Well, I'm a confident guy. What would I do? I said, what the hell's going on? What are you guys talking about? And then they'd laugh at me. It happens to me a lot. They'd laugh at me and they'd explain it. Because why wouldn't they? They want me to participate in the meeting, don't they? What are you guys talking about? I missed a page or a book, right? It's okay. So if you don't know something and you're sitting here, what do you want to do? Find out. So was everybody just following this and I'm wasting your time? It's going to look like that. Either I'm wasting your time or you're lost. Lost is not good. Wasting your time, oh well, if you already know it. Okay, so 1 second. Now that I asked you to ask a question, 1 second. What do you want the balance to be in prepaid insurance? $4,180. Right? It's zero. What are you going to do? Debit prepaid insurance to get it up to $4,180. Right? Magic. It went from zero up to $4,180. Insurance expense has $5,280 in it. I want it to be $1,100. What do I have to do? No, it's $4,180, isn't it? True, guys? I'm going to credit the prepaid, aren't I? Or, I'm sorry, the insurance expense. Because insurance expense is too big. Okay. Now, questions, sir?
Yeah, I just don't
Okay.
Is this like adjusting entry down below?
This is an adjusting journal entry, and this is an adjusting journal entry. This is the problem they originally gave me in the book, right? This is a different version of the same problem. What if when you buy insurance policies, this company debits prepaid insurance, which is fine, right? And then they make an adjusting entry at the end of the period for how much is the expense, and they increase the expense, right? It seems most logical to all of us, right? But it would have been okay, because it's going to be expense anyway someday. What if they debited insurance expense and credited cash instead? Fine. What do? We adjust from where we are to where we want to be. Got it? That's bringing me down to where I want to be. And I'm going to bring this one up to where I want to be. Now you got it? Okay? If you don't realize that, this is like, what the hell? Okay? So ask. Okay, you guys, did he just humiliate himself or what? No, he asked a question. It's a good question. You didn't realize what I did. You're dead, right? Got it? Now you know what's going on. Okay? Got it? Always ask, always ask, always ask. The biggest problem I had when I started my career at Arthur Andersen is that I thought I was supposed to know something. Finally, I got a senior on about my third job. I was just getting beat up. They said, I'm doing fine and everything, and I just lost. And he says, Jesus, you don't know what you're doing on this. I don't know. He said, no wonder it's taking so long to get stuff done. You have to know what you're doing to do anything. Here, let me explain it. He was mean, too, you know. It's this and this and this and this. What the hell's wrong with you? Didn't you get good grades? You're at Arthur Andersen? Yeah. Well, why didn't you learn something? Pay attention. Use what you know. Right? Think. You know? Well, yeah, he's right. And then pretty soon I asked him all kinds of stuff. I drove him nuts. He's a really good senior. Everybody got, if you work for this job, you go in and bug you and waste his time. He made less money because he got small bonuses. But I bet he made market. Because everybody's going to him asking him questions about every job, not just his. Yeah, so. And he also knew everything. I hated him. So anyway, yeah, I knew nothing. I want to ask you one more question. That's the adjusting journal entry. You guys tell me. Do you reverse it? You don't have to. But if you use reversing entries, would you reverse this one? Let me ask you this. Is that prepaid ever going to get used up? Is it ever going to become insurance expense? Yes. So if you want to reverse it, can you? Yes. So my answer would be yes to a reversing entry. Why would I reverse it? Because it's going to become an expense anyway later. What would my reversing entry look like? You're going to have to believe this one. What's the reversing entry going to look like, everybody? Try it. For how much? Yeah, exactly the same amount. Please don't screw that up and make a reversing entry, right? Credit what before you want a prepaid insurance? Okay? And you know what that's going to require us to do the next time? At the end of next year? We're going to have to debit prepaid insurance for the part we didn't use up, aren't we? Because we still want to use up some of it. And we'll credit insurance expense for that to get the insurance expense down to where we want it to be for just 1 year. Everybody agree? How much do you use each year? 220 times 11, right? We could do it, couldn't we? So if you make a reversing entry, it's going to change the entry into the next period. Got the idea? Okay. Let's try another one. On November 1st, rent revenue was credited for $1,800, representing revenue from the sub-rental for a 3-month period beginning on that date. Okay, let's do it. It's November 1st, is it? And what did they do? They debited which account?
Credited rent revenue for $1,800.
Okay, and what do you think they debited? It's rent revenue, right? They put it in the revenue account. And we haven't earned it yet. Terrible, huh? Yeah, it's really unearned rent revenue, isn't it? But what they did was they credited rent revenue, right? What they debit? No, are you kidding me? They're not earning it. What did it say happened? Rent revenue was credited $1,800, representing revenue from the sub-rental for a 3-month period beginning on that date. Rent revenue was credited for $1,800. Doesn't really say, does it? Oh, that's interesting. On November 1st, rent revenue was credited for $1,800, and they don't say what they debited. It could have been debited under rent revenue. But it's November 1st. you wouldn't have done that until December 31st. So what must have happened on November 1st? It's 3 months rent, and I'm not recording rent revenue yet. I put it in rent revenue, but I haven't earned it yet. So I wouldn't debit unearned rent revenue. They didn't pay me 3 months earlier, and I'm earning part of it, right? So it's really good to get trouble with this. All right. Yeah, it's not bad. It's a tough one. What's the deal? What's the deal with this? What did they do? They gave me what? They prepaid me, which is unearned revenue for me. They gave me cash. But I didn't debit cash and credit unearned revenue. I debited cash and credit rent revenue. And how do I know it was cash? It's November 1st, not December 31st. It wasn't an adjusting entry. We're doing the adjusting entry, right? Okay, that's how I determine this problem. I got to do the adjusting entry. The source entry must have been debit cash and credit rent revenue. Okay, everybody got that? Makes sense, doesn't it? What was it, 1,800 for 3 months? Wow. What could they have done instead of going to rent revenue, you guys? Instead of this account? What could they have done? What is it really? It's unearned revenue, isn't it? They could have put it in there, but they didn't. They decided not to. We don't care. What would be our adjusting entry? So that's the source entry. What would be our adjusting journal entry, everybody? What do you want the balance to be in each of these accounts at the end of the year? Did you follow why the 1,800 had to be cash? Yeah. Okay, we're good. It's a tough one. Okay, what do you want to do? How much should rent revenue be at the end of the period? How much time went by? Not 1,800. 1,800 is 3 months rent. That's for November, December, and January. What is it December 31st? Rent revenue should be 2 months, 1,200. How much is unearned? 1 month, which is 600. There we go. What do you want to do? Now it's easy, isn't it? Debit rent revenue for 600. Everybody agree? Credit unearned rent revenue for 600. There's my adjusting journal entry, right? At December 31st. This would have been November 1st, right? Didn't ask for that. You need to know what it is. Okay? So debit rent revenue, reducing it down to where I want it to be. And credit what? Unearned rent revenue. What did I just do here? I've got one that should or should not be reversed. If I use reversing entries, will I reverse this one? Are you ever going to earn the unearned rent revenue?
Yeah.
Yes. In fact, you're going to earn it real soon. So, and by the way, this would be the first day of the next year, right? The first day of the next year is the reversing entry. Right after you close your books, right? Do your reversing entries. Got it? So what would this be? Debit unearned rent revenue and credit rent revenue. Isn't it going to be rent revenue eventually anyway? Yes. Got it? It will, won't it? It'll be rent revenue eventually, guys. So go ahead and record it. That one makes sense, doesn't it? Okay. Do we have one that's depreciation, maybe?
No, purchase of advertising materials that during the year was recorded as advertising expense. There's $290 on hand at the end.
What would you do? Here's what they've got. They've got advertising expense with how much? What was that? What was the number?
800.
What are you going to call it if you still have it? Advertising supplies inventory? I like that. Something like that? What's in there? Nothing. What should you do? What should you have in advertising expense and what should you have in advertising supplies inventory?
290 inventory.
How are you going to get there? Probably debit it. Everybody agree with that one? Advertising supplies inventory. This is my adjusting journal entry at the year end. And all we got to do is decide if we're going to reverse it. Advertising supplies inventory goes up because I want to record it. And credit what? Advertising supplies expense, right? How much did I use up if I bought 800? There's 290 left. 510. That's the number I want there at the year end, right? Everybody agree? Staying with me? Okay. Okay, let me ask you this, do you want to reverse that one? Are the supplies ever going to get used? Yes. Would you reverse it? If you want. You don't have to. But if your company has a policy reversing entries, what would you do? You'd reverse it. Okay? So January 1st, you'd have a reversing entry for this one too. What would it be? Debit advertising expense, because that's what it's going to become anyway. And credit advertising supplies inventory. Huh? Just switching this around. Everybody good? Now let's say it was depreciation. Debit depreciation expense, credit accumulated depreciation. What would that be? Could you reverse that? Are you ever going to undepreciate it? No. How about if we change this one? How about if what they had done, if you got to go, go ahead and go. If you got someplace you got to be. If you want to stick around a few minutes, we'll do a couple more. I don't have a life thing. Do you? No, not anymore. It's gone. See you guys. Okay. So they have to go eat. Am I right? Maybe. Okay. Didn't have time for that. Before they close the dining hall. When do they close the dining hall? 8:30. Oh, they got off. Okay, anyway, all right. So let's say they'd done this instead. In advertising expense, they have nothing, right? In advertising supplies inventory, they have the whole 800. What they do, when they bought the supplies, they put them into office supplies inventory, right? For advertising supplies inventory. What are you going to do as you use them up? Put them in expense. How much did you use up? Adjusting journal entry at 12/31. It'd be a different adjusting entry, wouldn't it? Of course. I'm going to debit advertising expense for the portion I used up. How much did I use up, guys? 510. What am I going to credit advertising supplies inventory for? 510, because that's what I used up. Everybody staying with me? Now expense instead of inventory. Put it in expense, take it out of inventory. Excellent. Where are we going to be in here? What's it going to look like? What are you going to have in advertising expense? 510, which is what we want. What are you going to have in advertising supplies inventory? 290, which is what we want. We don't care, do we? In fact, some people would say that approach was better because it was supplies until you used it, right? It doesn't matter. Now, would you do a reversing entry on this one? Are you ever going to unuse those supplies and put them back into supplies inventory? I don't know how you physically do that. You used up all these supplies. They're not. You can't recreate them and undo using them. It'd be ridiculous. So no reversal. Just like depreciation in. Are we good? Better? Comfortable? Last one says we increased interest of 770 has accrued on notes payable. How would that one work? What do you think? What would the adjusting journal entry be? This one's kind of interesting. This is worth sticking around. What would happen? What would be my adjusting journal entry? Time has gone by. I've incurred interest expense, right? It is expense, isn't it? Could be receivable too, but it's expense. Okay. I've incurred interest expense, and I have interest what? Don't pay it. Payable. When you just debit interest expense and credit interest payable. How much was it? Okay. Now you tell me. You want to do a reversing entry on that? So this is at 12/31, right? If I do them, I don't have to. It's following January, right? Following day. I don't have to reverse them, but I can if I want. Think on that. This one's interesting. What was their rule of thumb that they said? On accruals, this is an accrual. What do you do with accruals? This one, the common sense is a little further from you.
So all accruals should be reversed.
This one looks kind of funny, doesn't it? Because what's reversing? So yes. Yes. Is that right? What's going to happen? Look at this. If I use a reversing entry, what's it gonna be? Debit interest payable. The payable's gone even though I haven't paid it. But is it gonna be gone later when I pay it anyway? Yes. It is, right guys? Everybody staying with me on that? It's gonna be gone later when I pay it. So it will reverse sometime, right? It's okay to do it now. And you're gonna credit interest expense? Now, I just closed interest expense. Between doing the adjusting journal entry, right, and doing this reversing, I closed the books. What was my balance in interest expense? 0, and now I have a credit balance in interest expense. Are you kidding me? That's okay. It's okay. Let's now pay the debt. Okay, let's pay the interest. Let's pay interest here, some later date. Okay? And let's say the amount of interest we pay is $2,000 interest paid. Okay, got it? Pay $2,000 of interest. And we're just paying interest, no debt. Keep it simple. Okay? What do you pay it with? What would you debit? I have a credit balance in interest expense, don't I? Interest expense. Because I closed the books and had 0 in there, right? And I made this reversing entry at 770. What's my real interest expense for this month? Isn't the 2,000 I paid less the 770 that was accrued last time? Because I'm paying the payable, aren't I? So how much is really my interest expense? 2,000 less 770, isn't it? 1,230, is that what that is? Yeah. 1,230 is the interest for this time. If I paid 2,000 and 770 was for last month, right? Last year. Everybody agree? Oh. All I do, though, is I debit interest expense for the whole thing. And this will show you why people might want to do this. What's 2,000? Debit less a credit of 770. 1,230, which is the interest expense for this time, right? For this accounting period. Last accounting period it was 770, at least accrued part, right? Got the idea? I've got the right balance in interest expense. And by the way, what's the balance in interest payable? If you put 770 in and then you pay it. It goes to 0, right? What should it be after you paid it? 0. We're fine, aren't we? Okay. Now, if you don't use a reversing entry, so let's say you decide not to. Let's say decide no reversing interest, right? You decide not to. You don't have to. It's optional. What would they look like? What would the adjusting journal entry be, you guys, on 12/31? You can see why this drives people crazy, right? On 12/31, what is it? It's debit interest expense for 770. Credit what for 770? That, isn't it? Interest payable. That gets our financial statements correct, doesn't it? Okay, no reversal. What are you going to do on the payment date? Pay interest. $2,000. How much cash are you going to give them? What are you going to debit? What are we paying off? Interest expense is part of it. That's this year's interest. What else are we paying off, though? It's still on the books. We're going to get rid of it. Interest payable. How much of that 2,000 was to pay off last time's payable? 770, right? And it now goes to 0, doesn't it? Where we want it. What are we going to have in interest expense, everybody? It's magic. 1,230, which is the amount of interest expense we really have, and we're thrilled. Do I care if you do reversing entries or not? Not in the least. Now, one more thing. Why would people maybe want to do reversing entries? Isn't it kind of silly if you just have one loan like this? Let's change our business. We have 400,000 loans out there. Let's make them notes receivable. I have 400,000 notes receivable and I'm accruing interest on all of them. And they all have different due dates, different amounts, different interest rates. Got the idea? Different payment schedules. So what I do for my adjusting entry, debit interest receivable and credit interest revenue is what that one's going to be, is I compute an estimate of how much everybody owes me, right? That I haven't accrued yet. And I debit interest receivable and credit interest revenue. I don't even know who it is and I don't care. I'll reverse that puppy, right? Get it out of there. And then what? whenever anybody pays me, it's always debit, cash, and credit, interest, revenue. I don't have to figure out how much the cash is credit, interest, revenue, and how much is credit, interest, receivable. I don't care. So if I had 400,000 notes, am I gonna keep track of each one of them individually and do all these journal entries? Why waste all that time, right? I'm just gonna estimate the interest recorded, right? Same, you can do the same thing on payables if you have lots of them. Got the idea? How about if you're renting properties? I've got 10,000 apartments I rent out. They all have different dates they started renting. They're paying me in advance, right? So what happens? I debit cash and credit under rent done. So what would I want to do? Maybe what I do is I always, when they pay me, debit cash and credit rent revenue. And then at the end of the year, I figure out an estimate of how much I haven't earned yet. Debit what? Rent revenue and credit unearned rent. But I don't want to keep track when they're making the rent payments, how much was unearned rent, right? And how much was rent revenue. Because some of it was earned last month, some of it earned this month, right? Different dates. So I just reverse the whole thing. And when they pay me, I debit cash and credit rent revenue. So there are lots of environments where you use this. Okay? GE does a whole lot of service contracts for people. Maybe that's why they like them. And those service contracts have all sorts of dates because you don't sell a service contract at the end of the month, right? You don't say, hey customer, you want to buy a contract from me on January 5th. And then say, no, you have to wait till January 31st for my accounting. What do? You sell it to them on the 5th, get their money, right? And so then use reversing. Big deal. Everybody getting the idea on this thing? Why they exist?
Are we doing this again next class?
What's that?
Are we doing this again?
I hope not. We'll do something else. Kid, we'll do whatever you want. We can do more of these. We have the review session a couple hours too. You can do my stuff. I don't care. Take a look at it again. Think about it again. By the way, is there anything wrong with their rule of thumb? No, except you might be like me and remember it backwards. That's the danger with it, right? What if you just use common sense instead? That's not bad. Okay? I think. This time, this just makes sense look like it doesn't explain at all. Work. Stay up. The nice thing about having an old guy like me as a professor is just imagine how many people I've seen who knew absolutely nothing like you guys who turned out to be CPAs, right? Lots of hope. You can all do it. We can all